A friend of Africa, former Finnish President Martti Ahtisaari wins the Nobel Peace Prize. Hello, I'm Dimiake Mwakalielye.
And I'm Vincent McCory. Also ahead, stocks still sliding with no sign of relief for the world's economy. We'll tell you its effect on Africa. All this and more on today's In Focus. Sounds good, Ndimiake. We'll have more on Martti Ahtisaari later in our show. Africans know well his role in helping Namibia become the peaceful nation it is today.
Okay, so let's get started for now. Fears of global recession sent markets in Europe and Asia plummeting Friday, extending the massive sell-off that began Thursday on Wall Street. The main indexes in London, Paris and Frankfurt were all down 10% at the start of Friday's trading sessions. The fall-off in Europe came hours after Asian stock markets dropped across the board, with Japan's Nikkei index closing with a loss of nearly 10%, its biggest one-day loss since 1987. Investors appear unconvinced that recent moves by authorities worldwide will be enough to restart stalled credit markets. Top officials, meanwhile, the International Monetary Fund and financial ministers from the world's 7 richest industrial nations are gathering here in Washington for meetings on the economy. We'll talk about that shortly with VOA economics correspondent Barry Wood. Now, here's VOA's Robert Raphael on what happened Thursday on Wall Street.
The day began with the U.S. stocks on the rise, investors cheered by the coordinated action of central banks, which had cut interest rates worldwide. By the end of the day, investors had lost confidence the move would restart stalled credit markets. And the Dow Jones Industrial Average fell more than 7%, dipping below the 9,000 mark for the first time in 5 years. Meanwhile, White House spokeswoman Dana Perino confirmed Thursday the government may buy shares in some of the nation's banks to calm global market turmoil. The U.S. bailout package adopted last week gives the administration that power.
This is a dynamic situation. We still have a volatile stock market, and Secretary Paulson is looking at all the different tools to figure out which ones should be used at what time and how robustly and how much money to put into each.
Meanwhile, as the world's economic leaders gathered at the International Monetary Fund in Washington, the IMF chief said the world is on the brink of a global recession.
The crisis is serious. The crisis is protracted, but nevertheless, we see that the end of 2009 will be the beginning of the recovery.
Dominique Strauss-Kahn says nations must work together to avert a global recession. Strauss-Kahn says the IMF also activated an emergency program allowing the fund to provide loans more easily to emerging countries in economic distress. Also in Washington, World Bank President Robert Zoellick said those countries must not be forgotten, especially as food and fuel costs rise.
The poorest cannot be asked to pay the biggest price. For the poor, the cost of crisis can be lifelong.
In New York, Thursday's sharp drop was the 7th consecutive day of losses. Meanwhile, in Europe, where stocks had posted gains earlier in the day, the continent's markets declined by as much as 2.5%. Robert Raphael, VOA News.
Joining us now to talk about the world financial crisis is VOA's economics correspondent Barry Wood. And on the phone from Dakar, Senegal, is African correspondent Scott Bob. Thanks you both for joining us and being here on In Focus today.
My pleasure.
Well, let's begin with you, Barry. You see, things seem to be sliding really fast down the hill. Now, can you give us a little update on what is happening right now?
Well, as you reported at the top, the markets in Europe were down very sharply, and this is going to be the worst week for stock markets, it appears, in 30 years. That's serious. Wall Street started down sharply, but there are those people who expect Wall Street to turn around later today, and we shall see. We've got several hours trading yet to go, but certainly it's got the attention not just of financial markets, but of the world. And I think that really focuses on the group of 7 finance ministers who are meeting here in Washington.
Now, Scott, I want to toss this next question to you there in Dakar. You know, despite what Barry just said, we keep hearing from African economists that Africa is not as gravely affected, I guess because they didn't take the same risks as some of the economies here in the US and Asia. Can you explain how Africa is actually escaping this?
Yes, the African financial institutions and stock markets are not as developed and not as linked in most cases to this global system, and so they're not experiencing the ups and downs and the bumps and the serious declines that we're seeing in some of the industrialized nations. However, there have been some short-term effects, and then there are also expected to be some longer-term effects on the African economies.
Just to follow up on that, Scott, Africa is many times a recipient of all the negative effects of any world development, especially in the economic area. Looking at the commodity prices, the oil prices, how is this affecting different countries, oil-producing countries, for instance, and those that are consumers?
Well, the prices for commodities and for the African exports, of course, is one area that will affect African economies in the medium and longer term. Oil prices going down will hurt the oil exporting countries, but will help the oil importing countries. Other commodities, cocoa, coffee, copper, gold, and so forth, will also be affected. But more immediately, for example, are remittances. These are the monies that Africans working abroad send back to their families in Africa, and these total, according to the United Nations, some $40 billion a year. Already, some of the houses in Africa that receive these monies for the families in Africa have noticed a decline in remittances. This will probably increase if unemployment goes up in the industrialized world, or if people find themselves out of jobs, business activity goes down, and so forth. So that's one area. Another is that investment flows may diminish as financial institutions, which are hard-pressed to have money to lend, cut back on their investments and their loans for major infrastructure projects in Africa, for example.
Barry, just to pick up from where Scott just left off, obviously there's going to be some indirect effect on Africa. As he just mentioned, there's already a decrease in remittances. I imagine there'll be even a bigger reduction in, say, aid programs.
Aid may hold up short term, so I think that's maybe the lesser issue.
Investment?
I think that's going to drop, of course, but I think the most immediate problem that the African nations are going to face is the exchange rate. When you've got a financial crisis of this magnitude, there is pressure on exchange rate. So the message to governments has to be safeguard your reserves. Make sure you've got enough to finance a tax on your currency. In the case of Johannesburg, where you have a sophisticated stock market, get ready for a downturn.
And I have to stop you right there. We have completely run out of time. Of course, a very exhaustive subject. But thank you so much to Barry Wood here in Washington and Scott Bob there in Dakar, Senegal. We'll certainly be watching these developments closely.